All right, what does a market do? Fluctuates. Yeah, it goes up, down, okay? So let's say you have this market that goes up, down, like that. And the first strategy is your PCA strategy. Now, PCA stands for price cost average. Very simple strategy. Fund managers do this, okay? And what we're going to ask you to do is on a monthly basis, January, February, March, April, May, June, July, August, September, October, November, and December, you are going to be investing every single what? Every month. And you're going to put the same amount of money in. Okay, is it different amounts of money or the same amounts of money? Same amount of money, right? So this is an example. I'm going to put in £100. Okay, it's just an example. You can put 1,000, 10,000, it doesn't matter. Same amount of money. So where am I going to put it? I'm going to put it in here, then we're here, then we're here, wherever, every month, right? So wherever it might be. Sometimes it's in the middle, sometimes it's up, sometimes it's wherever it might be, okay? Can you see that every month the price is in a different price? Can you see that? Yeah. Yes or no? Yes. Sometimes it's where? Up, sometimes it's, and sometimes it's in the, thank you, in the middle. Now, what does that mean? If you put the same amount of money in the price cost average strategy, what do you think the price is going to be at the end of that year?
In the middle.
Average. Very good. So if you take the high here and the low here, where do you think the average is going to be? Probably around here in the middle. Okay? Now, you might say to me, but Marcus, why is that so good? Like, I'd rather buy down here. Yeah, but how do you know down here is down here? Most people, what they do is they get a lump sum of money and they go, right, I need to invest this. Right, okay, well then, boom, and they put their money in. Now, how do you know that you didn't invest up here? Well, you don't know until afterwards, because it could have carried on and then you would have done well, or it went down, or it went sideways. So what we're going to do is we are going to cut that money up, and every single month you're going to put in at a different price. And this is some people call it dollar cost average or pound cost, so it's price cost average strategy that we're going to do every single month, okay? And you will get an average price. Now, we already know that it's been above this price once, twice, 3 times, 4 times, and the likelihood, therefore, is that it's going to go up above this price. Now, the good news is that a simple strategy, yes or no?
Yes.
Every month? Is there anybody in this room that thinks that they can't do this strategy? Anybody at all? Okay? The bad news is you're probably going to be making 5 to 7% a year on this strategy. 5 to 7% a year. I mean, how many of you in your first year would be quite happy to make 5 to 7% on your investments? You would? Okay. But you'd be even happier with more. Let's just leave it at that, okay? Now, how many of you would like more? Who would like more? Okay, well then you're going to have to do more. Because this one here, there's really nothing to do. On the next one, which is called VCA, okay, this one here is value cost average, What we're going to do is we're going to go in every single month, could be first day of the month, could be the middle of the month, could be last day of the month, everybody's going to be different. But this time, instead of putting the same amount in, this time we are going to put, when it goes up, we're going to put a little bit less in, but when it comes down, we're going to put a little bit more in. Why? Because when it's up there, it's more expensive, isn't it? So why would I be buying the same amount up there if it's expensive? So I'm going to put a little bit less in. So this could be 75 or 750 or 7,500 or whatever. But when it's cheaper compared to the month before, the sales are on. Well, when the sales are on, what do you want to do? What do you want to do? You guys are like, What does mean? What are you going to do? Buy more. Not just buy more. So what you're going to do is you're going to buy more. Now, watch this. If I would have put 100 here and 100 here, what's the total? 200. And it's 100 here, 100 here. If I do 75 here and 125 here, what's the total? 200, but I've got a lot more down here at a cheaper price. Does that make sense? Yeah? So that's what I want to do. And I keep going compared to, right, very simple, it's either up or it goes down. If it's down, what do I do? Buy more, right? I buy the more. Now there are variations of this. There are even more, like you buy even more, even more. There are advanced versions of this. But we're just going to keep things very, very, very simple today. Is that okay? Yes. Okay. Now, what do you think is going to happen to the average price of this at the end of the year compared to PCA? Do you think that the VCA price is going to end up higher or lower than PCA? Okay, don't say anything yet. Have a think about it. I don't want you influencing, because I want you to, the other person next to you to think about it. Otherwise, they're just going to do what you said. Okay. So, do you think with VCA the price is going to be higher or lower compared to PCA? I'm going to give you 3 minutes. By the way, make sure you have an answer. If you have to guess, don't stay on the fence in the middle. Especially for men, being on the fence, it hurts. Get off the fence, make a decision. That's the way you learn, okay? So 3, 2, 1, and. Hands up if you think by VCA the price is higher. Thank you. Hands up if you think the price is lower. Ooh, a lot more highs than lowers. And the answer, of course, is lower. The average price is, of course, going to be lower because when you buy more at the bottom, what does that do to your average price? It brings it down. If I put 1 million at the bottom here, it will be like that, right? So, and that's what we want. So, what is the difference between the two? Well, the difference between the two might not be a lot, might be here, and the difference between the two might just be 10%. But 10% a year, I'll take it, okay? So with a VCA, we're looking for up to 15% a year. Now, how many of you would much rather have 15% than PCA 5 to 7%? And how much more work are you doing? Instead of just PCA, just investing and you don't care, you open one eye and you go, well, it's higher, so why do I want to invest so much, right? And then you open the other one, you go, ooh, it's lower, so let's get in a little bit more. Does that make sense? Yes? All right. Now, these are all investment strategies, so I'm going to ask the VIPs, what is the one question we need to ask ourselves before we go and invest in anything? Can it go to zero? Okay, and it, yeah, so you know that. Okay, good. So VCA. And this you're going to do in 20 minutes. Obsessed with day. Obsessed. What's this? What's this? A month. A month. A month. Now, there are variations on this. I've just taught you the very, very simple version of this, but I mean, how much more difficult can this get? How many of you agree this is a really simple strategy? Is there anybody that can't say, compared to last month, it's come down, so I'm going to invest more. It's gone up compared to last month, so I'm going to invest less. Is there anybody in this room who thinks they can't do that? And before you answer, we have 8-year-olds doing this strategy. So now you can answer the question. Simple, right? Any questions about it? Pretty simple? Can you do this? Yes. Then turn to the person next to you, give them a high five and say, you can do this! Come on, guys, come on. Don't make me come over. Oh, yes, I can't do this. All right, now who wants to make more than 15%? Who wants to make more? Okay, if you want to make more, you need to do more as well. Okay, so then what we're going to do is we're going to do something called the buy-sell zones. Let's put it here. It's buy-sell zones. Now, how many of you see that it seems to be hitting its head here a couple of times? Can you see that? Yeah, and it's hitting down here as well. It's kind of like a bit of a support level or a floor. And up there it's a bit of a ceiling or resistance level. So once you do that, you then know that the middle is here, right? So I'm going to draw a middle line here like that. And now what we have is we have two zones. We have the buy zone and we have the sell zone. Now where do you think the buy zone is? I hope so. Okay, good. I'm glad I'm here. Right, buy zone and sell zone at the top. So instead of kind of going, why do you keep buying up there, Mark? I don't understand. That's because you're investing. You're not really timing the market. But if you're starting to time the market, it means you have more time on your hands to actually say, I think I could do more than just give my money to somebody else and look at the piece of paper once a year and put it in a folder. Can you see the difference? One is PCA, I don't care where it is, right? VCA is, it's higher or lower. And with buy zone, sell zones, I'm saying, well, hold on a moment. Why don't I only buy down here and sell up here? So now I've introduced a new element. So now you're not exactly day trading, but you are getting in and out. Because if it goes high, listen, most people, they buy something, and because they are long-term investors, they don't really look at their portfolio. And they could be up 40%, and they don't even know it. And do they sell? No, because they're buy and holders. So if it goes up, they hold. If it goes down, they hold. If it goes sideways, they hold. What kind of a strategy is that? It's not at all, is it? Think about it. You're up 40%, but you don't know. And then the market goes down. So now you're up 30%, but you don't know. Now you're 20%, but you don't know. Now you're 10%, but you don't know. Now you're at 0, but you don't know. Now you're at minus 10. And at the end of the year, you go, oh, bloody hell, minus 10. Stock market, bloody stock market. No, not bloody stock market, bloody you. Isn't that true? Because you are so, I'm not saying you, obviously, people out there, they are so lazy, they can't spend a few minutes a day looking to see if something has gone up by 20%. If it gone up by 20%, I would get out immediately, because if it goes up 20%, guess what's going to happen the next day? If you don't look, you don't know. Does that make sense? Now, can I show you the advanced version of this?
Yes.
Yes or no?
Yes.
All right, let me see. If I draw a line here, then what you've got now is you've got a lower buy zone and an upper buy zone. And you've got a lower sell zone and an upper sell zone. Make sense? Okay. So what we're going to do is now we're going to start getting into like doing a bit more trading. See, as I go down, I'm doing more and more trading. Okay, this is investing, trading. What I'm going to do is I'm going to buy down here, and if it's in the sell zone, I'm going to sell. But as it comes down, why don't I do this? If it goes in this zone, I'm going to buy more. Why? Because it's in the lower zone. Guess what I'm going to do there? I'm going to buy, but how much am I going to buy? A little bit less. So I'm doing value cost average inside the buy zone of the buy zone sell zone. Can you see that? But if it goes up here, what I can do is I can start selling, like let's say I'm 50% here and the rest up here, right? So what I could do is I could buy here, sell here. How much am I selling? Everything, because it says 100% here. Okay? Right. Now, here, how much am I buying? The higher amount, because it's in this zone here. It's not in this zone, is it? It's not in this zone either. It's in this zone. So what am I doing? I'm buying, but I'm buying the higher amount. Then it goes up here, so what do I do? Sell. How much am I selling? The lower zone, so I'm selling half. Make sense? So I've still got half in play. It comes down, and I'm doing this. So what am I doing now? Buying. But how much am I buying? Yeah, but the more amount, whatever that amount is. Yeah, absolutely. Then it goes up here. What do I do then? I am selling. How much? All of it. Very good. So next, I do this. What do I do? Nothing, because I've sold everything. Right? I've sold everything. So there's nothing to do, so I've got to wait. Okay? Then it comes down here. What do I do? Okay, buy what? Okay, so you're getting it. Sell, blah, 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 etc. and so forth. Very good. So the buy zone, sell zones, we're looking here for up to 25% a year And that is in just 20 minutes a week. And let me tell you why that's the case. Because if you don't look at it, you will miss out on certain things. See this one here, for this one here, yeah? If you hadn't seen it, let's say you only look at it once a month, right? I'm not looking because Marcus said it was monthly and I'm too lazy, quite frankly, right? It goes up here, doesn't it? Right? And then what happens? I can't see, so you've got to tell me. Does it come down?
Yes.
Okay, tell me where, are we down? Okay, right. Let's say it's down here. What could you have done were you looking? But you're not looking, are you? You're not looking, so you're going to miss it. Just like the buy and holders, you missed it. You missed this, and guess what? You could have sold some of it there and made a little profit, but you didn't, did you? Because you're not looking. What I'm saying to you is the more you look at it, the more money you will make if you follow a strategy. If you don't follow a strategy, then you're going to be all over the place. Right, so we've got a question over here. So please stand up, please stand up. All right, what is your name, please?
Hi, my name's Michelle.
It's Michelle, everybody! Come on, big round of applause. Yes.
So in the upper sell zone,
Yeah.
you sell short there as
No,
well.
because, great question. The question was, do we sell short? The reason we don't sell short is because we're still investing. And up until this point, we're not yet trading. Great question. And because we're not yet trading, we don't have a stop loss. And therefore, we are not selling short. Okay, this is just buying. Okay, very good. Give her a big round of applause. Okay, very good. Now, PCA, VCA, buy zone, sell zone. Who wants to make more than 25%? Yes? Okay, then you've got to do more. So this is where we get into the 20 minutes a day, because what we're going to do is we're going to use our Buffalo strategy. Now, this is very different. Because as a trader, I'm looking at this and going, well, that's fine, but why the hell am I buying in the middle here? I just want to buy at the extremes, right? So what I want to do is I want to buy here and I want to sell here. Right? This is a bit high, so I'm not going to get in here. So I might get in here, maybe, and I want to sell there. Okay? Too high. I might get into this one here, and I might sell here. So I'm looking at the extremes. I'm trying to get in at the lowest possible price. I am now timing the market. I don't go in once a month. I don't do anything like that. I don't get in once a week. I am only doing it if it comes to the price that I want. And if it doesn't, I don't get in. Make sense? That is trading. And the other thing is, because I am now trading, I now get to use something. What do I now get to use? I now get to use a stop loss, so I can now sell short. Right? So you're going to put a stop loss here. That's your 1%. That's your 1%. I'm not getting in there. That's your 1%. Okay? But now I can also get in here by selling short, and I can make money going down here. I can get in here, I need to have my stop loss, and I can make money going down here, and I can't get in here, Maybe if it comes back up here, I can sell short. If not, I go to one of the other 7,000 securities that are out there and sell them short. You're always going to find something to buy, you're always going to find something to sell short, because there are so many stocks out there. But you need to have your stop loss in place when you are selling short. Does that make sense? Yes? And here on the Buffalo, we are looking to make up to 35% a year, and that in just 20 minutes a day. Yep, you're going to look at it every day. Now, if I were you, I would do it at the same time every day. Why? Because then you get into a habit. What's the word, please? Habit. A habit. You will never, if you are in the habit of doing something, you'll never go, oh, and not do it, because you're in the habit. I mean, you don't go, oh, I've got to brush my teeth again, because you're in the habit. You pick it up, you do it, maybe you walk around a bit or something, but you do it. Why? Because it's a habit. And in the same way, get into the habit of doing it. Either who's a morning person? Anybody a morning person? Okay, so maybe that's for you. What about the lunchtime? You know where the idea of the lunchtime trader came from, right? The idea is that you're working for somebody else. Fine, it's an exchange of time for value. Now you have money to invest. Thank you. Excellent. And you use 20 minutes of your 1 hour or whatever time you have in order to create wealth for yourselves, maybe using a little bit of their electricity, a little bit of their internet. It's not going to be much, is it? Now, how many of you think that's a good idea?